This is the Southside School of Financial Freedom watch list and market report for the week ending August 5th, 2023. Our question this week is, what is yield curve control? The answer will be provided later in the video. This week the market ended lower. The Dow Jones Industrial Average decreased minus 0.43% on Friday and was down minus 1.11% for the week. The S&P 500 decreased minus 0.53% on Friday and was down minus 2.27% for the week. The Nasdaq decreased minus 0.36% on Friday and was down minus 2.85% for the week. Looking at the week, we can see that there were 4 up finishes versus 11 down finishes for the major indexes. On Monday, all the major indexes finished up. On Tuesday, the Dow Jones Industrial Average finished up while the S&P 500 and the Nasdaq finished down. On Wednesday, Thursday, and Friday, all the major indexes finished down. New unemployment claims were 227,000. U.S. payroll growth totaled 187,000. Private sector job gains totaled 324,000 in July. U.S. manufacturing contracted for the ninth straight month. Mortgage demand dropped for the third week in a row, and the credit rating agency Fitch downgraded U.S. long-term debt. New unemployment claims, U.S. payroll growth, private sector job gains, U.S. manufacturing contracting, mortgage demand dropping, and the U.S. long-term debt being downgraded are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is yield curve control? Yield curve control is a monetary policy action whereby a central bank purchases variable amounts of government bonds or other financial assets in order to target interest rates at a certain level. Note that the Federal Reserve and other central banks throughout the world sell bonds to move interest rates up and buy bonds to move interest rates down. To implement yield curve control, they apply their buying and selling of government bonds in different combinations to control the yield curve on the bond market. For example, U.S. government bonds and notes are sold with different maturities ranging from 1 month to 30 years. The Federal Reserve could buy shorter term bonds rather than buying longer term bonds, which would cause the interest rates on the shorter term bonds to decrease while the longer term bonds interest rates increase, and vice versa. The Fed's manipulation of bond rates also affects the stock market. Has the Fed's bond buying policies affected your stocks? Or do you own any stocks at all? If not, why not? Is it because you don't understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside Trading Watch List from the week ending August 5th, 2023. The strongest performer on the list this week was Editas Medicine Incorporated. Ticker symbol EDIT. It's in the second column. It was down minus 2.79% on Friday, but increased 4.38% for the week. Editas is a clinical stage genome editing company that focuses on developing transformative genomic medicines to treat a range of serious diseases at the genetic level. Looking at a summary of the results, you can see that Editas has increased just over 2% year to date. I did not trade or generate cash flow from Editas this week, but I may in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 ETF SPY. The Southside portfolio is up 44.47% versus 16.83% up for SPY, a difference of 27.64%. The Southside is beating SPY by more than 27.5%. The cash flow generated by the Southside cash flow system for this week was 2.84% of the portfolio account value. The account value changed by minus 1.47%. Meanwhile, the S&P 500 ETF SPY changed by minus 2.21%. Bitcoin watch. Bitcoin loss minus 0.97% this past week and appears to be in a bull market, though it is down almost 58% from its all-time high, which was achieved in November 2021. It is up more than 75% year to date. I sold option contracts on 3 positions this week, 1 call and 2 puts that range from $17.34 to $105.34. You can get more details, including the total dollar amount of cash flow for the week on the website, southsideschooloffinancialfreedom.com. In order to increase your financial IQ and understanding of the stock market, please check out our publication and past videos for other questions of the week. The videos are arranged in playlists, levels 1, 2, and 3, and they are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.